Hello and welcome to another update video about Link. Yeah, Link does not yet confirm a local low in place, so without a doubt we're still caught in a correction. We're gonna take a look at that in a minute, but overall here on the larger time frame, the situation is unchanged. The white scenario seems to be leading. As long as the market is above $17.65, which is the key support level for the white scenario, which shows a roadmap to $69 next, that is a key target, first ideal target for the larger third wave. And then we could still move higher. I would not rely on any move higher, but $69 would be an ideal target for that third wave, as mentioned in previous updates. But please understand that, of course, we're currently still caught in a correction on the smaller time frame. And I'm not telling you we will stay above $17.65. I'm simply saying I'm watching for a reaction here to one of these Fibonacci support levels at either $20.17 or $17.65. Because without a first 5-wave move to the upside, a micro reaction to support, there is no confirmation that the next move up has started. But the idea was back in August that the price could find support in this support region here, in this larger correction. This is obviously on the larger time frame, and the pattern is or was quite stable because we had a first rally and a corrective pullback. Then we had a rally out of our support region, and the price has now entered another support region, which, however, is sort of, not, it's not a setup that has the same quality as back in August. The main reason is because from an Elliott wave point of view, we're typically looking for these so-called 1-2 trade setups where a third wave should follow, because even if the move up doesn't fully materialize as per the roadmap, you still get a really, really good trade out of it, even if it breaks down. So that's why most Elliott wave traders are really looking for those 1-2 setups. Here we're now sort of in the midst of a third wave, and the situation is then always a little bit more risky, and things can break down easily, especially if the market overheats very, very quickly. But as long as you understand what the key pivots are, the key levels that keep the uptrend alive, you can manage your trade. So $17.65 at the moment is key support. We don't want a sustained break below that level to keep the white scenario alive, which shows us the roadmap for direct higher prices. Below $17.65, the focus will shift onto the yellow support area again, okay? It's just important to understand market structure. That's what Elliott wave tells us. It doesn't tell us if support will hold or not. There are sometimes probabilities that are, or let's say, it sometimes tells us about patterns that give us clear probabilities. But what is more important is we get clear parameters. Yeah. And only parameters are actionable for traders. Only parameters can be used, not, okay, I think support will hold or not. That is not professional. It's about the levels. They are actionable, and that is what traders can use. Now, looking at the smaller time frame, on this chart, as I said, we are still caught in a correction. Okay, there hasn't been any evidence that a low is in. Resistance is still not broken. Here on the smaller time frame, you can see this support area with key support at $17.65. We talked in the previous video about the potential that this fourth wave could still be unfolding, or if it's already completed, then we are already in the fifth wave up, but the $21 level needs to hold. This is short-term support. So you can see there is a wave count. There is a scenario that allows us to understand that circle wave 5 here to the upside could have started. But without a break above the white wave 1 high, that is kind of speculative. So that would be a break above $25.10 that's needed, followed by a break above resistance at $28.30. For now, this correction still seems to be unfolding, and it is, you might see this as a head and shoulders pattern. I mean, it is one, but it needs to break below the neckline first, which is $19.90. And what does that mean? I mean, we don't need a head and shoulders pattern. We've got the Elliott wave pattern, right? So Elliott wave tells us that below 1765, the short-term bullish scenario needs to be revised. The head and shoulders pattern gives us that local information as well, but suggests that we might already have a break of support a little bit earlier. Yeah, but I don't normally follow these patterns because Elliott wave already gives us all the context. Okay, so $17.65 is key support from an Elliott wave point of view. Yeah, that's the update about Link. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.